Good afternoon, traders. It's Mark here from the Day Trading Room. Time is approaching 4:15 London time. That's in the afternoon on a Sunday afternoon here. We've been reviewing my trades from last week. Great week, and just time to put the video out for Friday's trades. I want to focus really on the first trade that I took, why I took that, and the premise behind it. Two, a trade that I missed, which actually was setting up as a very, very nice trade. And I know hindsight's a wonderful thing, but in actual fact, I noticed at the time I thought, oh, that was a miss. But it's not until I've re-reviewed it a couple of times and I've looked over the play, the setup, that I've actually gone, actually, yeah, you missed a couple of key points of information there. So that was disappointing. I'm going to discuss that, and then finally discuss the last trade I took on the day, which was just a fantastic end to a great week. So I've got the 15-minute chart up here. I'm on my laptop, by the way, so screens look a little bit different, not quite as polished as normal. But anyway, on the 15-minute chart here of the YM, just on the regular trading hours, just to put it into context, really, the opening position on Friday, severe down move for the last 4 or 5 days. We've broken through support here. That was the support I talked about, I think, on the Wednesday or Thursday video, the one that we've been looking at so carefully. And then, overnight range obviously quite high, and the gap, severe gap lower. So there's the outlook from the Friday. Let's bring back at 1 minute. I'm just going to pause the video and adjust the tick scale so we can get a proper indication. Hang on a second. Okay, that's better. I always have my tick scale on TradeStation fixed to minus 1300 to plus 1300 ticks, and for some reason, if you change that chart to a 15-minute and back again, it loses the scaling. But it doesn't bother me normally because everything's fixed on my office computer. But when I'm on the laptop, it seems to mess up. But anyway, we're back in business now. So, very weak open. What am I looking for at the open? I'm looking for two things. I am either looking for this drive, good drive, pullback, continuation. That's going to be the nice high probability setup. Or alternatively, bit of a counter trend move that runs out of puff and then get on the end of that and fade that. But first of all, just wait to see some topping pattern. Don't stand in the way of it. So wait to see some sort of topping pattern. And for me, that was on Friday we got this pattern here. Now it's never exactly as you want, very rarely, and the setups are disguised. But you've got to look at it in terms of, rather than patterns of candles or bars, you've got to look at it more in terms of patterns of people. So, okay, we've got lots of people who perhaps have been buying. This is the final shudder for them. Any up move in the first 15 they're feeling great about. Any down move they're feeling panicky about. Okay, that's the sort of way to look at it. So we got this little move. This is the first couple of minutes. Then we started to pushed up above the high, but the key point here, this is the key point, and I will zoom in if I can make that clearer for the video. Okay, that's probably all we need actually. That was the end of my trade. So this is good stuff. This is good stuff. We had a similar setup. I remember talking about it in the video earlier in the week. I can't recall the day, but it's the same sort of thing. Okay, there's our high, there's our open, drive lower, fine, pull back up, we poked above the high, we couldn't hold, and we're talking less than a minute here, by the way. It's a 1 minute candle, of course. Straight back down. But confirmation for me, look at these ticks. Just look at those ticks. There is nothing to suggest that there's any strength in this market for the short term. There's nothing to suggest that. And so as soon as I see that, that's part of my premise. It's not identical, obviously, to the patterns that I like, but the premise in terms of what am I seeing? I'm seeing an attempted drive up, a failed break of high, a wick put in, but more importantly for me, if I've looked at my risk management webinar, that's now on YouTube. More important for me, as you guys know, is the quantifying of the risk. Once that wick has formed, I can quantify that risk, and I do talk about specific stop sizes in the webinar, but this is one of the examples I gave of where you don't need that. You don't need it because the premise is, okay, I'm going to give it a few ticks above. I'm not just going to give it one tick above. I can give it a few ticks above, but even if I do, I'm still got a nice tight stop on that. That rolled over beautifully, beautifully, beautifully. First scale off. Don't forget this is 20-point increments here, and I'm normally off half at the first scale at 10. So there's my first scale. As we approached here, took some more off. I'm left with a little bit of a position thinking, hold this. This has got a good flush in it. Didn't get it. We then rolled back up, and then I took a stop on the last. What was quarter by now? About there. So, okay. Great trade, great entry, good scaling. Scaling again made that into a nice profitable trade. If I hadn't have scaled, then it would have turned into a scratch trade. So importance of scaling on that one, and didn't get the absolute panic flush that I was looking for the final quarter. But hey, never mind. Good trade, good read, all good. Let's look for the next one. Now this is the trade that I missed, and the trade that I'm disappointed I missed. But I didn't really, as I said earlier, I didn't really understand what a miss it was until I looked at all the parameters and all the details now. So let's run through that. Okay, what's actually happened here? Very weak open, yes. Drive lower, okay, a little bit. Pull back, fake out, yes, still bearish. Pull back lower. Now, this is where the balance starts to shift slightly. We have gone from being very bearish now to there's some bulls lurking around. Ticks for the moment. You won't hear me say this very often, but forget about the ticks for this moment, just for the moment, because we're looking at change in balance over the next 15 to 30 minutes rather than the very short term. Very short term, ticks weak, no doubt about it. Stay on the short side, you're rewarded more for that. But let's just look at what's happened here. Pushed up, pushed down. This should have fallen through the floor. This should have fallen through the floor. That should have been the final sort of push. Then we get the panic. If it's not falling through the floor after we break through lows, you've got to start to think, okay, why is it not falling through the floor? It is because there are no sellers interested in that price. Why is it popping back up? Because there are some buyers interested. Why is it not popping right the way back up here? Because buyers aren't that keen yet. But we've got a little bit of buying interest there. That's important to note. I'll move on quickly. Coming up to 7 minutes of video. I do like to talk on a bit. So when we got to this position here, we put this wick in really low tick reading, spike in volume, low tick reading, and we pushed immediately back up. Then we're starting to think, okay, the selling interest has waned, and more importantly, well, not more importantly, but adding fuel to the fire. I'm just going to flick over to the Dow Cash now. Hopefully that's in the shot. There's 12,100. So a whole number we pushed under. Nice shudder. That encouraged buyers in. Good volume, low ticks, straight back up. That's got to be worth a buy. That's got to be worth a buy. But I was so aligned, I think, with the short side setups that I didn't. Although I saw it, I didn't take it. And by the time I thought, actually, that's not a bad little trade, we were up here, and the risk was too much for me. In actual fact, that was probably the trade of the day up until this point. I'll talk about that one in a second. But that really was a nice setup. Had a lot of things going for it, really. The flush, the volume, the ticks, and the subsequent action. The fact that we were so deep down, the fact that we had that action, and the fact that we found some buyers there indicated there was some mileage in that, and then there was, and a good trader who's quick on his feet, would have got a 50 pointer on that. Would have got perhaps a 50 pointer, maybe not the whole lot, of course, but a good chunk anyway. So, but nevertheless, pleased with playing on the short side and moving on to the next trade. So then we started sitting in this here. So I'm starting to think I'm a bit 50-50 now, even though this was a lot of movement. Look at the range. It's actually a reasonable range, and the tape was really very busy. It was quite thin, but it was busy, and I was thinking, there's some good moves here, but I just cannot get a read at this time. I just could not get a read. I didn't have a setup in place. I wanted to stay on the short side. I kept thinking, okay, while we're still struggling to break highs, here, I'm liking the short side, but the tape was spiking. I wasn't that happy with it. The ticks were still saying stay short. so that was okay, but I just couldn't find an entry for me. So I just said, okay, we'll just let's just take a step back and wait for a good trade. And the patience paid off. Back in my early days, in my first few years of trading, I'd have tried to anticipate this sort of stuff here. I'd have tried to call top bottoms breaks and got myself in a mess. Now I'm older, wiser, more experienced, and I understand that, hey, if you can't read it, you can't read it. Don't waste your capital. You're up on the day. You may have missed that. Fine. That's great trade. Let's look for another one. And patience paid off because this was a lovely, lovely trade set up here. Some sort of news came out. Probably rumours on the debt deal. I guess that's the sort of thing that was flying out on the Friday. But more importantly, from a technical point of view, or from a tape point of view, there was the high, there was the break, there was the. Don't forget that we come from the bottom of that range, so bang, straight up, nice high ticks. I'm drawing over the important parts here. Nice high ticks. But what do I want to see? I want to see what happens after things levels break, after surprise moves. It's the action, it's the subsequent action that matters. Like back here, the subsequent action to that break, which was a push lower. Here, the subsequent action to the break through the high was a holding pattern. We were holding. There was a good support on there on the tape. The ticks were also holding, indicating people weren't hitting the bids on the New York Stock Exchange stocks. So that for me is a great trade. I'm looking for at least one more good shove. So although it's not ticks to zero quite, it's a similar type thing. The ticks to zero came later. We'll talk about that in a second. But this is more of the first pause. Little bit longer than normal, I have to admit. A little bit longer than normal, 2 or 3 minutes. You normally only get a minute or so. But don't forget, we've still had a little bit of a bearish overtone to the market, so it's not so surprising. But anyway, this is one of my favourite sort of things. We popped up, held. Yeah, we're fine. We're holding. I'm in on the trade. My stop is fairly reasonable. Looking for that pop. Got that pop. Fantastic. I'm scaling out as we push up. I'm scaling out, always scaling out as we push up. Scaling out again. Actually, it was I think 1,000 ticks. Was it 1,000 ticks? My scale. I'm just double checking here. Yeah, the 1,000 ticks was my scale. So, but I decided to leave a runner on. Okay, decided to leave a runner on because I thought, okay, we have come a long way. Going back to the 15-minute, I won't put the 15-minute on because it'll mess up the ticks. But recall that 15-minute quite low down here. But also the slight change in sentiment back round here. This sort of action holding at highs. This wasn't a temporary change. Consolidate then push. Forget my drawings, guys. I'm freehand with a mouse here. Maybe I'll get myself a tablet one day. But you can see what I'm trying to say. This wasn't an attempted push and then a drive lower. This was a push and a hold. So we get this push. I'm in, great, scaling out, leave a bit of position on, rolling back down. That's our consolidation level. Roll back to that. Oh, and there we go. Ticks back to zero as well. Nice little lull in volume. I'm back in again. I'm adding back on what I took off about there, or wherever it was on the high tick. So I'm back in full size position. I've made some money on the trade. I've still got a little bit of part of the trade on. I've let that run. I've let that come back a little bit. I'm still thinking, okay, we could be filling gaps. We could also be filling overnight. Oops, I've just moved that. We could also be filling range. So yesterday's low, which was around here. I haven't got it on this chart, but it was around here if I recall, and then the gap was around there because we didn't quite make it. But that's what my target obviously is. It's a great place for a target. Why not? So back in again on the long side here. Little tiny bit of heat, not a lot. Little tiny bit of heat, not a lot. And then drive up, scaling off of course into that high, scaling off of course. As we pushed up and filled that gap, little tiny bit left, not much, guys, not much. Not taking a lot of credit for the last little bit I had, but the 1,000 ticks got me out of that one. 1,000 ticks, or not the 1,000 ticks, sorry, the new high in ticks got me out of that one, because I just thought, okay, it's likely to unwind a little bit now. Didn't quite reach the gap, weren't far off it. I wasn't going to hesitate. Okay, missed a little bit of extra meat on the trade, but other than that, I really can't complain. So apologies for the length of this video, but I think it's important to run through the sort of background and premise to the trade and digging in a little bit. So that was the first trade. That was the second trade that I should have taken, or really should have taken, and you can probably see that why that was a great setup in hindsight. And the third trade, great patience with this rubbish here. And then the third trade, is it holding? Is it holding? Yes, it's broken. It's holding. Great. I'm in. Let's try and look for some more. I'm back. Ticks pull back. Everything's fine. Back to consolidation area. Little bit of heat, no problem. Scale, scale, and we're done. So great ends to a great week. Looking forward to another great week next week. Hopefully we can, get some great volatility, various different setups, some continuation stuff, some fade stuff. It's all good. It's all good. But it's going to be a news-driven market, I feel, next week. We'll talk about that in the morning meeting. We'll talk about some of the levels. We'll talk about some of the action on Friday, how we've closed, perhaps how other people are thinking about things, and also some of the stocks that I'm looking at the moment. One or two stocks. I don't normally look at stocks, but I've noticed a little bit of guidance for the Dow, giving a bit of a few ticks heads up on those. They seem to be moving, and the Dow's moving after. But anyway, we'll talk about that on the morning meeting on Monday. So anyway, guys, take care. I hope you had a good weekend, or having a great weekend wherever you are in the world. And please, please, please manage your risk. Whatever the trade, however good the trade may be, however much experience you have, you still need to manage that risk. At any point, trade could go against you, and you need to just take that stop. Get out of the position, scratch the position, take a, even if it's a big loss, whatever it is, it shouldn't be a big loss because your risk should be at a sensible level. Again, go have a look at my webinar. But if you just take the loss, move on, you'll forget it. Don't let it turn into something horrible. So manage your risk, guys, please. Let's have a great week next week. Likely be back with another video in midweek. Quick update on the tape reading trader program at the blog. At my site, DayTradingRoom.com. Go and have a look. There's an update there. Due to the nature of the file and due to the size of the file, I can't stream it from my site, and I can't send it out on DVD. So I've ordered some USB sticks. I'm going to stick it on those, stick the program on those, so that it's easy for everybody to access, and anyone who wants to get hold of that, then they can do on the USB stick. So, but that's we're still waiting. I'm still waiting for those to come. Once they come, and upload it and make sure everything's fine and it's good to go and it's the standard I want, then I will update with all the information you need to get your hands on that. So, okay, guys, take care. Good trading. See you next week.